Jim D in New Jersey. Keith, with Quad 2 coming in H1 2021 and mass vaccine implementation likely by Q3 2021.
Yeah.
It's got some good info here.
Yeah.
How close are we to a significant pickup in CapEx as businesses try to get ahead of the curve, especially with both candidates likely to emphasize big infrastructure plans pre-election and post-election by the winter?
I think we're about, like, by noon it's going to be priced in. That sounds like it's like a really good thesis. I mean, it sounds like it's all going to happen on a longer term duration. Sounds very bullish. I have no idea. I mean, I can tell you where the CapEx cycle is right now, actually, as opposed to telling you a story, which is important. Now, look at this. This is, where are we here? In here? Let's see. First of all, one of the CapEx things, which is completely counter to what you just said, slide 70. How are you going to have CapEx if you've exhausted all your PPP? If you're a small to medium-sized business, which represents 80% of the hiring in this country, and a lot of CapEx, your 84% of companies have spent all their PPP. Does that look like a go-forward CapEx curve that you're talking about? I mean, I'm just trying to paint the other side of what you said, because at the end of the day, the CapEx cycle is not unlike a lot of different cycles, which they're hostage to the slowdown of their prior peak of the cycle, which is like anything else. Let me just try to get you to that. By the way, on that slide 48, guys, small businesses, 50% of total employment, 80% of employment growth. Okay, so again, we want to make sure that you're not just using Wall Street talking points. That sounded like a wonderfully bullish narrative that I probably will use in Q1 or Q2 of next year, but I really don't think it's going to be priced in by noon. That's an important thing. Another thing to think about, like human beings. Actually, let's do CapEx cycle, slide 42. The yield curve nailed this. This is called white swan risk, this is the CapEx cycle in and of itself. Last I checked, that the lines are pointing downwards. They're not accelerating in anticipation of what you said. So yeah, it is a good story. Eventually, it's going to line up with this thing called slide 43, which is a profit cycle, because companies need profits to have the confidence to invest in CapEx. So now I'm telling you a story that you'd understand if you built and run a company. So again, if your profits are accelerating, like a lot of tech companies, you're going to accelerate CapEx. But if you're everybody else, you're kind of screwed. You don't just, unless the government gives you some more PPP money to invest in a CapEx cycle. And I'm thinking that PPP money is probably not, first of all, it's designed to go to the humans, not to the CapEx cycle. So there's a lot of great narrative in what you said. It has nothing to do with what's happening today. And it's likely to have something to do with Quad 2 when I'm long of Quad 2. The guy may work for the yay old wall. What was the gentleman's name who painted that nice picture of everything being great again? What was his name? Can you go back to that?
Jeez.
Yeah, that was great. I mean, I think it's worth repeating that.
Having a little Biden moment.
That was pretty good. But again, if you look at something like this chart, slide 46, this is the Hedgeye view on employment. This is like the real humans out there that aren't in a V-shaped recovery. We think permanent unemployment could double from here. It's a two-bagger, double. We think private payrolls, next slide, could drop more than 2% from here. So our view, that's Quad 4, okay? What the market's trading on today is not Quad 4. The market's trading on the prior gentleman or gal's question.
Jim D.
Jim. Guy's question.
In New Jersey.
Yeah, they're more old wall guys and gals. So Jim D's question was really old wall talking points that aren't Quad 4. That's let's skip over that part of the movie. Let's go right to the good part, which is Q2 of 2020, Q2 of 2021. Now, at that point, I could be there. But don't forget, at the same time, Jim, Bob, Cassie, Callie, everybody else, accept the fact that volatility is not allowing you to have that portfolio right now. Volatility, when it's high and rising, when it's in the wrong bucket, north of 30 in the VIX for sure, it's not quite there yet. It could be there by the end of the week. But it's there for NASDAQ volatility. When volatility goes up, it shrinks your time to be able to make money on that thought. It shrinks time and space. People on Wall Street think linearly. They're like, well, if I can go here, that's a good story for me to be long there, and I buy and hold. Well, you're going to accept a lot of volatility in between. And I'm going to get a lot of buying opportunities in and around those time slots too. I'd love to buy a Quad 2 portfolio and short gold when it makes sense, but I'm not going to do that just now because somebody gave me some talking points.